Hello. Can you all hear me? Can you all hear me? If you can hear me, just let me know. Speak back to me. And am I very clear? Can you hear me very well?
Yes, sir, we can hear you very well.
All right. Thank you very much. Today I actually plan to, and that's actually what I'm going to do to explain um, what we mean by the market structure, then the institutional order flow, right? The market structure and the institutional order flow, right? So that's actually what we'll be looking at today: market structure, right? And IOF. Right, IOF simply means institutional order flow. So these are the things we are going to look at. IOF is actually an ICT term, right? So market structure is what you guys should have learned in normal retail trading, right? This is what you should have learned as a newbie. If you check baby peeps, this is what you're going to see there. You're going to see how to trade the market structure. And the one thing I discovered in my uh, few days of trading is that um, the basic things are actually the most important. Every one of us, we always look out for, okay, changing our strategy. Probably when you are blowing up our account, when we are not making money, we surely want to change the strategy. We think that there is actually an holy ground anywhere. But I want to declare to you today that there is nothing like an holy ground, right? There is nothing like that, right? So, and I usually say this, that there is no strategy that's right, that you cannot actually make money from. Every strategy works. Every strategy works. You need to know that even though you are trading indicator, if you are trading thousands of indicators, everything works. If you see people trading price action, they will start condemning people that are trading indicator. They will say that, oh, they are doing the wrong thing. That's actually a very wrong conclusion. That's not true. Right, that's not true. I've seen people trading indicators for years and actually making money. In fact, after I actually left, because the first place I actually learned FX from was a broker. So the other person that actually teach me after that is actually trading indicator till now. The guy is still trading indicator, and if I tell you how much the guy is actually making per day, I mean in terms of percentage, he's making like 10%, 5%, 15% per day. Then if you actually accumulate that in a week, this guy is actually making more in a week, right? Is making more in a week, right? So there is no strategy that you cannot actually trade. There is no strategy that you cannot trade, and there is none that can actually not make you money. But the essence of our trading today is actually for you to see that we've actually left market structure, right? I've actually discovered market structure. But actually did not learn market structure right from time when I started trading. I started trading Forex since 2016, right? But since last year, I actually got to know about market structure, and since then, I've actually been using that in my method. So that's actually one of the things I would like to, even though in my course now there is actually market structure in there. Why? Because this is actually very important thing that you must actually know, because it's actually very important. It's just like human beings now. Human being cannot actually operate or cannot move without structure, right? Human being cannot operate or move without structure, right? Your structure, what actually forms your structure is skeleton, and this actually determines how a person looks like, right? And this actually determines how people actually are dressed, right? It determines that. So that's the same thing with market structure. When you understand what market structure actually means, you will be able to actually trade the market effectively. And there is one thing that you need to know, that market structure actually has characteristics, right? The first character, we have two major characteristics of the market. The first one, right, we can say that one of the characteristics of the market is actually a an impulsive move, right? They went by the market is actually making an impulsive move, or a trending market. Let me just name it as a trending, or when the market is actually trending, right? It's actually number one. I'm actually going to put some other thing under it. Then number two, we have a ranging market. So this particular name, different people have actually given it names, right? Different people have given it names. You actually heard ICT giving another name, another individuals will come and actually give it another name. So under this particular features of the market can either be trending or the market can be ranging, right? So under this particular trending market, that's what some people call an impulsive move. Some people will actually call it impulsive move, right? So some people might call it impulsive, right? Right. Some people may call it impulsive. Then some people might actually call it an expansion, right? An expansion. Then some people can call it distribution, right? Some people can actually call it distribution. That when the market is actually distributing, then some people, hey, there's actually another one there. That's which are the number four. If I remember, I'm actually going to add it with it. Then the ranging market, some people will actually call this uh, contraction, right? Some people will call it contraction. This is actually ICT term, contraction. Some people will call it B. Some people will call it a like accumulation phase of the matter, accumulation, right, when the market is actually accumulating. So these are the forms of the market structure that we have, right? There's actually some other names that people will actually call it, but I actually want to name this class to this, right? When the market is actually consolidating, you can actually call it consolidation too, right? This ranging market, when the market is consolidating, consolidation phase of the market. So these are the things that the market always do, that people will always give it a name that's actually happening, but everything still boils down to the same thing. Right, everything still addresses the same. So the trending market is actually called probably an impulsive move, an expansion, or a distribution. Another way we can actually call that is actually a ranging market, which is actually a contraction. So we call that contraction phase a period of time when the market is actually taking either buyers. No, there is no active participant in the market. We have two major participants in the market. We have the buyers and we have the sellers. Right, so we have the buyers and the sellers. So this particular ranging market is actually when the market is actually in a resting period. We call that a resting phase, whereby the market is actually accumulating. Right, they are accumulating contract in that particular area. Right, they are accumulating, they are contracting. That's actually what you call the ICT call that a contraction zone. Right. I've not studied ICT so well. Actually, you actually hardly see me studying any ICT video, really. Right. Anyone I study is just probably for me to glance through that. I can actually tell you that most of the things I got and what I'm trading, apart from what I've actually learned from the person I learned from, then actually there are some things I discover myself. Later on, so people say there's actually ICT time. Then I would actually love to see how I actually explained. I can actually tell you that most of the things I trade were actually the terms I actually got myself. Somebody actually said something that if you have actually been in the market so well, you will actually discover what ICT discovered. If you have been in the market so well, right, you've actually studied the market, and this is actually what happened to me. Most of the things I trade is actually my initiation. Later on, some people say that, oh, this is actually what some people are trading, but it's actually what I got by myself. Right. Some people might have trained that, nobody's actually an island, nobody is actually an invention of anything. Everybody just make research and got to know something and you just give it your own name. That is that. Please, you can mute yourself, please. I'm trying to mute everybody and this person is unmuting himself. If I see that person unmuting himself, I may remove that person from this webinar. Right. So that is that everybody got to know about different things, just like supply and demand. Supply and demand, ICT, we call it order block. Right. Some people, just like I will actually call it another name. Some people call it what's the another name? The people always call it called that sponsor can do. You can see. So it's actually the same name that people are actually changing. Some people say the whole is ICT term, but that doesn't mean that ICT actually owns that. People, just like what I said, you can study on your own and actually get the same information, even without studying any ICT material. You are going to get that same information that ICT actually has. So don't claim, oh, this is actually ICT term. People that comes to me, I will say, tell them I'm not training ICT because I never learned from that. So you need to know that. So back on what you're actually discussing, the market structure and the institutional order flow. Institutional order flow is ICT term. So I give the credit to him because actually where I actually heard that from, right? They heard it from different people, institutional order flow, and I actually have to learn that uh, from the person I actually learned from, right? So these are the things we're actually looking to look at now on in the trending market. Just like what I said, that in the market actually have two major participants. So these major participants are the buyers and the sellers. So in the trending market, the market can either, right, be in a bullish momentum, right, in a bullish momentum, right, which is actually where we call that the bulls right? In a bull market, the bulls are taking over, right? Then we can also have a bearish momentum, right? Which some people we actually call that is actually a bear market, right? That's why we call this bullish and we call this bear market, or we can also call it an uptrend and this a downtrend. It depends on the name you actually want to call that, right? It depends on the name you want to call it. Just like what I said, everybody can just get a name and give it, but just to make sure that whatever things you're actually naming it is a reasonable thing that people can actually identify it with, right? So in this particular, how do you identify a bullish market? So when the market is actually in an uptrend, right? When the trend is actually bullish, right? How do you identify that? There's actually some characteristics that we also have in an uptrend, right? There's actually some characteristics we can find in an uptrend, and there's some characteristics we can find in a downtrend market. And what are these characteristics? In a downtrend, the market will be making a series of higher high, then higher low, right? Then in a bearish market, the market will be making a series of lower low, then lower high. This is very, very important for you to know. So when you see the market making a series of lower low, lower high, then you know that, okay, this market structure, right? The market structure is bearish. When the market is making a series of lower low and lower high, lower low, so you say that, okay, the market is bearish. So you have actually seen the structure, then you can say that the market is bearish. But when you see when the market is actually making a series of higher highs and higher lows, right? Higher highs and higher lows, then you can actually conclude that the market is bullish, right? So what is this particular step that we actually call it higher high and higher low? So in a bearish market, the market will make higher, lower low. Then after that, the market will make lower high. Can you see that? Then lower low. It is not a lower low until this low is actually broken, right? Until this low is broken, it will make another lower low. Let me just let me clean that so I can continue drawing. It will make another lower low, then right, uh, lower high, then another lower low. So the market will continue in that particular phase. Then when you see, you can see when you already have, this is actually your lower low, right? Let me try to label that. This is your lower high. No, pardon me. This is your lower high. This is your lower low. This is your lower low. This is your lower low. This is your lower high, right? You can see in your lower high, this must not actually close above this, or there must not be anything that will actually spike this area. This must remain holy or sacred. You must not find anything that will actually touch this high, or else you are going to have what we call a break in the market structure, BMS, or a breaker, right? So you're going to have that when this structure is actually broken. Are you following? It might actually be a week, right? It might can be a week, just like a stop point. People call it stop point. We can actually consider something a stop point, right? Okay, for example, if we are making a series of lower low, lower high, lower low, lower high, lower low, lower high, you can, when the market now comes to this area, you cannot call this area a stop point until market eventually close down below this area or give you a breaker. A breaker can be below this area. Actually have a recordings of that. You can check that on my channel, how to see a breaker in within before this particular lowest low was actually broken. So you are going to call this a liquidity grab until this zone is actually broken, right? If this zone is not broken, there is actually a change of trend. It's a break in market structure. Are you following? Is a break in market structure until this low is broken before you now consider this as a breaker. I mean, as a liquidity grab when that's actually stop wanted, right? So you must actually know what the market is actually doing per time, right? You must know what the market is doing per time. Then we look at when the market is actually making a series of higher highs and higher low. Like we have higher high, then the market make uh, higher low. Sorry. The market make an higher low, right? The market make an high high. You can ensure that before you can actually say that market makes an high high, this high ought to be broken, right? So the market makes an higher low again. You must ensure that this low was not broken also. Then higher high. So this is a trend. When you see something like this, then you will confirm that this is actually a bullish market, then this is a bearish market. So until this low is broken, when this low is broken now, then you say that there is a break in market structure, then you will be looking for selling opportunity. So that says that when the market is making something like this, you should not look to sell. Right? You know, some people after some bullish momentum, right? You say, "Oh, I'm now looking to sell." I will be wondering why do you want to sell? This market is still bullish. Don't sell yet. You know, you should not just be a gambler. You should be a trader. You should learn how to be patient, right? You wait until you actually have a sign that this market is actually bearish. Some people say that, okay, I just want to catch the top. It is not possible. It is gambling. There's no way you actually want to catch the top because many times the top will actually catch you by taking your stop loss. It will catch you and you're actually going to blow your account. You know, some people, they're actually lucky in trading and they actually call that a trading style. That's not good enough, right? At least wait until your trend is actually confirmed, then you follow the trend. That's why the popular sayings, and which some people actually say that's actually a retail trading, but you should actually stick to that. Always follow the trend. The trend is your friend, and in this instance, you are following with the institutional order flow. Right. What do we call institutional order flow? On higher time frame, when you see that the market is making a series of bullish order block, bullish order block, bullish order block, then you can call that a bullish institutional order flow. Right. I actually have some characteristics that I use to identify my order blocks. Right. And in the bearish market or in the bearish institutional order flow, how do you identify that? When market is making a series of bearish order block, bearish order block, bearish order block, then you can actually consider that as a bearish order flow. That shows in a bearish order flow, then combining your institutional order flow and market structure will actually make sense a lot. Because when you are seeing series of bearish order block, then you are seeing series of lower high, or lower low, then you should know that I'm not looking to sell. The best thing that you can do in this kind of market is for you to look to buy. I mean, sorry, in a bearish order flow, the best thing you can do for yourself is just for you to look to sell. Just be looking for opportunity. Just wait for price to come back to. I don't just trade anyhow, right? I always like price to retrace a lot. When people actually say, "Oh, that's change trend," then I already know that my structure still remain bearish. Then I actually want to buy. I mean, still remain bearish, then I actually want to sell. That is why when most people are actually buying, I'm just waiting, continue to buy. I'm actually going to, I'm going to buy it from you. I mean, you're actually going to buy, uh, sell it to me. If you're actually buying, somebody is actually selling, right? If you're buying, somebody is selling. The market actually doesn't work at a random, right? The market doesn't work at a random. There are two participants. When some people are buying, some people are actually selling, right? So the buyers always buy from the sellers, and the seller will sell to the buyers. Are you following? So you always wait to actually buy at a discount, then you sell at a premium. Then it's actually ICT time. You buy at a discount, then you sell at the premium. The premium actually means that the price has actually retraced a lot. Then you're actually expecting. That's why we have OTE zones in ICT. Then you can now use that to actually take your trade. Then when people are buying, you are looking to sell. And when people are selling in a bullish market structure or a bullish general flow, you are only looking to buy. So this will actually save you from so many things,
Sorry,
right?
bro.
Now,
Can I ask a question?
no, we are going to ask a question later, please. We are going to ask a question later. I'm going to give room for question. So just listen. So just listen attentively so that you will not, you can get what I'm actually trying to explain, right? So we're actually going to, we go quickly into the chart. Uh, for you to see that. Then you need to know, after showing you that structure, then I will show you a lower time frame views from a higher time frame. I will show you a lower time frame views from a higher time frame. And this is actually a case whereby when the market is making, when the market is actually bullish in a higher time frame, then you're actually seeing some downtrend in a lower time frame. That is actually very possible. But when the market is making downtrend in lower time frame, don't sell, because the market is still bullish on higher time frame, and the higher time frame will always, right, supersede the lower time frame. It always take preeminence over the lower time frame. So you just look for opportunity to buy, even though when the market is bearish on lower time frame but is bullish on higher time frame. So we're actually going to see that instance. Okay, just for example, in this particular instance, the market is actually bearish now, right? So the market is making a series of this particular pattern, higher highs, lower high, lower highs, lower low, lower high, lower lows. We can see when the market is going up to give us a lower high again. Then on the lower time frame, you switch to lower time frame, you'll be seeing what? A bullish trend. Whereas on higher time frame is still bearish, but you'll be seeing a bullish trend. So a wise student will always wait to the end of this trend until you actually have a break market structure on lower time frame before you now take it down. All this is actually what I'm going to show to you now, right? So let's quickly go to well, let me use daily, probably GBP USD. Where is it? Now look at this area. Can you see? A market actually created a higher high, higher high, higher high, higher high, higher high, higher. This is actually daily, higher high, higher high. You can see market make a lower low. This is actually a lower high too. A lower high is actually a lower high because this one has been broken. Market created a lower high. Then after market created a lower high, you have a lower low, right? Right. Look at this area. This is like a shift in market structure. Anytime you have something like this, when market give you something like this, right? This low is actually this low is actually higher than this. This is actually what we call a shift in market structure. Uh, uh, Shift in market structure, right? So in this instance, you're actually looking that okay, this market actually shifted its attention. I mean, its structure. Then you're actually looking to buy an opportunity. So this is actually what we have here: higher highs. Then what we have here, we have a lower high. Can you see? Because this high failed to break this high, so this is a lower high. So this actually is like a sign of bearishness in the market. Then after that, market created a lower low, right? Then created a lower high, then a lower low. Then after that, market created a what? A higher high, broke this lower high. So that should actually inform you that the market is changing, right? So you are going to confirm that okay, the market is actually bullish now until this low is broken before it's not so that oh, the market is still going down again. So what you are now anticipating in this area is that the market should create a lower high, right? A lower high, I mean, sorry, a higher low, then continue to go higher, right? The market should continue to go higher, right? So that's actually what you are expecting, that the market should actually be doing something like this and be going higher. Can you see that? So when you have actually noted something like this, you can have actually established the trend for you. So in between this area, can you see this area? Oh, on the lower time frame, it will still be bearish, right? It will still be bearish. But before you know it, we have a breakout. Market retested that breakout, then market is actually going higher. But okay, let's quickly go to the lower time frame. You see that the market, we have actually established the fact, even despite the fact that the market has is actually yet to be creating series of higher highs and higher low. But because this high has been broken, this now gives you an assurance that okay, now the market has changed direction. There is a break in market structure. Now, what you are now looking for now is for market to create a higher low because it is a bullish structure. Your entry should always be at the higher low. Now, this is where we are looking at this particular zone. From this area, we just look for this area on a lower time frame. You will see that this is actually, let me see if my chart will actually get there. My chart cannot get that area, so I will just use H4 instead. When I did 4, I'm not sure it's actually going to get there. I can actually find another example for that. My chart is not getting there, so we can find another example because on higher time frame, what you're actually going to expect in this area is that the market is now going right, is now going down, right? You're saying, oh, this is actually still following a trend, but you should take note that there is already breaking market structure. So if you already understand market structure, what you are anticipating is the market should create a higher low for you to continue to buy. But you are not going to buy this market immediately. You need at least H4. You actually say this is actually daily. You need at least H4 to actually give you another bullish breaker. It's already going down now. Then you need H4 to give you a breaker before you actually go do that. Let me just find an example of what I just explained in this area. Now, look at, we've already confirmed that, okay, there is a change in market because this is actually lower low, right? The market is creating a series of, right, after this area, higher high, higher high, higher high, then we have higher low, lower high, right? Lower high, then we have lower low, lower high, lower low, lower high. It actually broke this area, but unfortunately, it broke this low again, right? So we consider this as a lower low, right? Lower high, lower low, right? Lower high, lower low. Then what do we have? We have break in market structure, whereby market actually broke this area. Then that should suggest to you that there is now change in market structure. This is actually a bearish institutional order flow. How do we know? We are having a series of bearish order block. So when this high is broken, then you're not looking to sell this market again. You just wait for opportunity for you to buy that market. So how will you buy it now? Now let's just look for in this particular zone here. We just use H1 time frame. Then you see that on H1 time frame, it will still be bearish, but you are not looking to sell that pair. You are just looking for opportunity to buy that pair. Now you just go to let's say H1. Right, let's go to H1. You will see the trend actually started from this area. You will see a series of, this is actually the high. This is a lower high, lower low, lower high, lower low, right? Then it break market structure, right? This can actually confuse you. That's why you can use H1. But the markets actually break down again, right? Lower high, lower low, lower high, lower low, right? Lower high, lower low, then until you actually break this market structure. Then what are you looking for? You see that, okay, the market has actually changed to a buying opportunity here. So you're just looking for you to buy this market, right? This low. But fortunately, I think this market also was actually get heated. So the opportunity you are just looking for, I'm not teaching any strategy. I'm just teaching you how the market actually works and how you can find a downward movement in a bullish market, right? How we can actually find a downward movement in a bullish market. Then immediately this market actually broke structure. Right, this is actually a lower low now, then a lower high. Then the market, you can see on higher time frame, this market continue to create series of higher high, higher low, higher high, higher low, higher high, higher low. Let's look for another example. You can see within this area, even though the market is now bullish on this area, then you're looking for opportunity to buy, just to buy this pair. Now look at this area. This is a downward movement in a lower time frame. Let's go to H1 again. Let's go to that H1 again. So you will see what I'm talking about. Now, the market is creating a series of lower low, right? Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Can you see? Then the market gave us a break in the market structure. So because you know that on a daily time frame, this market is still bullish, right? You are not going to be a seller in this downward movement in H1. No, you're not going to be a seller. And this is actually applicable to monthly. When the monthly is bullish, you don't want to be a seller in a lower time frame. You just want to see when the lower time frame will just give you a break in market structure to go in the direction of the monthly, right? Or of the weekly, or of the 8-4, or of the daily, as the case may be on your higher time frame and your lower time frame. Right. So you must actually learn how to bring this thing into your trading style. Right. So this will actually avoid you to actually trade against the trend in the stuff. Now, some people that are actually trading BTMM, they will actually be, let me don't use BTMM because it's still a good strategy. This is actually level 1, counted as where's level 1? Probably level 1, level 2, and level 3. Right. This is level 1. This is level 2. This is level 3. Then what do we have? We have a change in trend. Then the market is actually going higher again. Can you see that? So this is actually what you can find in the trend. And don't forget, I talk about the trending market and the ranging market, right? The ranging market is actually when the market is actually consolidating. I said in a trending market, we have a bullish market, then we have a bearish market. Then a bullish market, the market is creating a series of higher high and higher low. In a bearish market, the market is creating a series of lower low and lower high. So it is now best for you to incorporate your trading strategy into this area. So you check the trend. What is the trend of higher time frame? So when you check the trend of higher time frame, so if you're actually trading probably like like BTMM is trading H1, right? Just to find their 3 levels of rise and drop. So it will now inform your mind that okay, the market structure on higher time frame is still bullish. So even though you have three levels of rise, right? You would still, I mean, if the market structure is still bullish, even though you have three levels of drop, you know that three levels of rise in the H1, you know that you're not going to sell. You're just waiting for you to give you opportunity to buy. Right. The same thing with people that actually learn other nado. If your 8-4 is saying that okay, you have a source and breaker on 8-4, and you actually check higher time frame and say that it's actually bearish, right? You don't want to be a buyer. On Nado's course, you have source and breaker on 8-4. You based on that 8-4, then look for entry on lower time frame. But when you see that the market is actually bearish on 8-4, right, and it's actually bullish, right, on higher time frame, then you can actually look to buy. But when the market is actually bearish on higher time frame and bearish on 8-4, then you actually want to look to buy. You can actually be killing yourself. Right. So let me quickly show you what GU actually did. Then actually take questions. Then I call it a day. Now, look at this. In GU, some people are actually looking to buy this pair, but I was not looking to buy this pair. Why? Because the market is actually making a series of lower. Look at this. It already gave us a shift in market structure, right? A higher high, then a lower high. The market break this low, then market is actually going down. Then market came back. So my opportunity is just for me to look for my pattern for me to just take this trade. And you know that this market is actually bearish, right? When you know that this market is actually bearish on daily, I'm talking about daily now. I'm not talking about probably on higher time frame, it can actually be bullish, or let's see weekly. On weekly, this market is actually creating a series of I can say I can you see? So it's actually bullish here. But on daily, it is, let's assuming that you just want to use daily as your higher time frame and your other entry time frame. So as in lower time frame. In this particular case, this is actually bearish, right? Showing you kind of because creating a series of lower lows, right, and lower highs, and creating bearish order block also. So you're just looking for the best opportunity for you to buy this pair, right? Best opportunity. So we can now, you can see this bullish move. Let's see this bullish move now. This is actually daily. So this bullish move, probably when you go to H1, then you are looking for when this pair will give you a breaker to the downside, because you already know that okay, this pair is actually bearish on higher time frame on daily. Then on H1, you are just looking for this pair to give you a breaker. Then when this pair actually got to this area higher high, they give you another higher high, then give you a lower high, just like a shift market structure, break this area, then you're actually looking to sell this pair. So you don't want to be a buyer again on this pair because you actually know that this pair is actually bearish on daily. Then on H1, you are seeing it is actually bullish. So until you actually see the change of trend in this area, you will not actually take any position on this trade. Right. So this is actually how to trade with the market with the market structure and how to follow the trend in the market. I hope I've actually add values to you based on this. So you can as well ask your question now. You can ask your question. Right. You can ask your question. So nobody want to ask question now. Let me, because these guys have started again. Let me hide that annotate so they will not draw. Yes, a low can actually be broken with weeks. Can be broken with weeks. Some people will actually call it okay. You have to wait for bodily clues, but a low can actually be broken with weeks, and a high can also be broken with weeks also. Depends on what you're doing. You actually find the examples, can find the examples. But the best is actually to wait for the body, but that doesn't mean that a week, just like some people, if they want to draw their Fibonacci, they will draw it from week to week. People draw it from body to body. So I draw from week to week. So and that doesn't mean that what I'm doing is wrong. And that doesn't mean that what people that are drawing from body to body is actually doing is also wrong. So we can actually conclude that way because everybody have their own views of the market. Right? Question? Question. That time frame you look for OB is actually depending on you. I'm just teaching you what the market is actually doing in a higher time frame and what market structure actually looks like. Then I'm using this to teach you that if you actually see a bullish trend on higher time frame, then there's nothing that will actually says that you cannot see a bearish trend on lower time frame. That doesn't mean that when you now see a bearish trend on lower time frame, you're now looking to sell. No, that's actually going to be counter trading or counter trend trading. So you look for a bullish opportunity on a lower time frame that was bearish for you to follow the trend on higher time frame. So I'm not saying that, oh, this time frame or this time frame. Go and discover that by yourself. Moreover, this is actually a free class, so I should not be feeding you with all those information. This is just to guide you. I'm not teaching you any entry or whatsoever. I'm just teaching you the market structure, which is actually very, very important for you to trade with. So when you follow this, you should be able to trade much more effective. All right, how do you identify uh, um, LG? LG means liquidity grab. LG, I cannot say there's liquidity grab until I actually have break a market structure. Just look at this eye. Or these are equal eyes. Can you see these equal eyes here with this pin? Equal eyes with this pin. Then this candle came by, actually took them out. Then what happened? Market came and actually break this low. So I will now consider this as a liquidity grab. So until there's a break in market structure, I cannot consider something as a liquidity grab. Right. Look at this eye also. This eye was rated. This particular eye was rated. The market broke it, break this the low. Then I consider that as a break market structure. Look at this area also. These are like equal eyes. Then this candle came from nowhere and just break this eye. Then when markets break this level, then we say, okay, this is actually a confirmed liquidity grab. This is a confirmed liquidity grab, right? Question, please. Question. I hope you've actually learned one or two things. You can see these recordings again, then practice and actually learn how you can actually bring it into your strategy. Right. This is actually the number one course outline that I have in my own system for people that actually want to learn from me. So, and for my students also, they were actually going to get the whole of this and actually learn this, and they would learn how to actually follow the institutional order flow when you're actually trading with the market structure. So with this particular area, you will not be trading against the trend. So I've actually showed that person what liquidity graph actually means. Just like this low. Can you see this low? Right. This low was rated, but there is no break in market structure. So you can't call this a liquidity graph. You can actually, some people will call it, but for me, I won't call it liquidity graph once I see a breaker. Once I see a breaker, I won't call it a liquidity graph. Just like this particular eye was rated until this breaker, then I won't call it a liquidity graph. Look at this low also was rated, then until this area was broken, I won't call this a liquidity graph. So this now confirm it as liquidity graph. Because this market might not come to this high again, I'll continue to drop. So it's not a liquidity graph until, because liquidity graph will always work in, they will induce people, they will trap them, they will shift the market away from them. So you can say, oh, liquidity has been grabbed from that area and they have already shifted the market away. I hope that is taken. Any other question? Just like this, look at all this eye was rated, this eye was broken. Then when this eye was taken out, these are actually equal eyes. Look at what market break this market structure, right? The market drop. And so when market come back to this area, market still drop before breaking this layer and going up. Look at this eye also. These are liquidity zones. Liquidity zones are where the monies are, right? I actually explained this in my recordings. That's actually the modus 3 so of my course. Right? See how liquidity was taken, then break market structure, then market needs to go down. All right. Thank you very much. If there is no question, so we love you to actually study this, then bring it in line with your trading strategy. Then you should actually be okay. You know, market structure is actually very important, right? Market structure is actually very important, right? I've actually talked about breaker here. Just talk about breaker. Just listen in between the lines. I've actually taught so many things. So if you're looking for breaker, you would have, if you're actually looking for any video on my channel, I cannot actually tell you, this is actually the part, even though I actually titled them. So you actually yourself, I cannot be the one looking for that for you again. So you have to be the one to actually look for that work, because really you're not actually paying me for that. So you should also enjoy it by yourself, work it out and actually search the video for yourself. Just study all the videos there. Might be able to get that. So and if you're actually smart enough, you'll be able to get that by yourself. Right. So if there is no more question, then I think I can call it a day. And you've actually learned something. And if you have not learned, then it's good for you. And if you have learned so much, then it's also good. There was an individual that was planning to ask question the other time. The guy is no longer talking. Is this still here? All right, guys, thank you very much for joining in. So probably once in a while like this, we can be having webinars. I see that. So some people have actually asked me about this section, and I see that many people are actually struggling with this. That's the reason why I have to hold this market structure webinar so that you can actually add learn what the market structure actually means. So you can study this back test, see what actually happens in the market, then you see how it actually flows together with your method. Then I can bet it with you, you'll be smiling every week. It is not possible for you to know institutional order flow, market structure, and you're trading in line with that, and you are not actually making money. It's not possible. So, guys, thank you once again. Thank you for believing in me. I know some people are actually a bad sayers, but I will not look at their side, and I will continue with my own work. So, thank you. I'll see you another day.